Hi everyone. I think thank you so much everyone for coming and showing up today. I know that today is Diwali, lot of celebrations happening in NS, but still you guys have showed up. I'll make sure that at least you guys will learn something today and go, and so that you guys will see like oh, it's a good investment of time, right? Introducing myself, like I'm Dhanush, graduated in 2023, computer science background. Worked in a fintech company as a product manager. We were tokenizing real estate, and my interest in stock market started during my engineering time during 1920, where most of the stocks were down. There I got my license in India to sell mutual funds, guaranteed by SEBI, saying that if you want to sell mutual funds in India, you have to be an right person in India to do that. I got my license and do have manage people's money in mutual funds. So that's how I started, and have a couple of certificates on India level where I analyze stocks and tell to people I can legally do only in India. But down the line, I want to do my charter and to be part of this fintech programs and other things. So that's where my interests are into finance and technology, and that's where I worked in like past 2 years in the fintech domain. And today, let's understand like what are we doing with fundamental analysis. I think everyone gets fascinated when we hear stocks, bonds, anything, right? Like, but when to buy and what to buy is a bigger analysis needed, right? Today you see 10 companies and you want to just put, or you can't just put your money all in the 10 companies. Yes, that is a diversification, but what component or what weightage money you have to put in an individual company matters, right? That is what fundamental analysis is. It gives you an idea what to buy. Like you have two things and you have only limited money. What to do? You need to know where to put your money, right? So this fundamental analysis will give you the strength to understand, okay, this is what I understand, I can put my money there. Technical analysis will help you understand when to buy. You know that, oh, this is what the charts are, and I am planning to do that basics as well in the technical analysis. But technical analysis will give you an idea when to buy things, but fundamental analysis will give you what to buy things. Both has to be there as a person if you are an investor to understand and to make money. If you are buying at the wrong time, again it is a wrong call. If you're buying a wrong company, again it's a wrong call, right? So both the things has to be there. That's the reason I started with basics, then going with fundamental, then taking the sessions on technical, not today, but yeah, down the line. The objective is very simple, to understand this overvalued or undervalued companies. Maybe to understand the business behind the stock and the intrinsic value. We'll just touch the basic valuation, not today, but tomorrow I have my second session, so I'll be doing that. So it's as simple as that. This is the objective. When we see the fundamental analysis, we have the two parts. I think one would be the qualitative and another would be the quantitative. Why the terms qualitative, quantitative is given? Quantity is something where we are able to count. It's all numbers. Qualitative is non-countable, but the countable is because of the qualitative. Because management runs the business, right? So there need to be some research on management, what the management is doing, how are they able to make more money. That is what the qualitative analysis is. That is also needed because business is something run by humans. What type of humans are running is the qualitative analysis. Most of the people will avoid qualitative analysis, but I think one of the main research has to be done on qualitative, because the people who run the business is most important. And today we are just concentrating on quantitative analysis, that is economic, industry and the company. I'll brief you about each of them. So this is what for today's class. Economic analysis will give you an overall about the company report. About the country report. Like how does the company doing, country doing, right? So we are going the top-down approach. There's again some people go with bottom-up approach as well. Bottom approach in sense we analyze few companies, then the industry, then the country itself. But we are doing the vice versa. We are doing the country. Is the country doing well? Then the industry, then the company. Okay, depends on each of them, but I think every portion has to be covered. So when it comes to country, we need to know whether the country is doing well, right? That is most important part. I know the stocks might be doing well, but what is happening at the country level? So there are few factors which has to be considered before jumping on to the industry level or the stock level, right? So one would be the GDP. I know this would be a small definition, but you can take classes on that. But GDP is the total value of goods or services which is produced in your country, right? And in simple words, just check whether your GDP as a number of that particular country is going up. That is a good sign. And when I say just check, it doesn't mean that just check. You have to compare with your peers, right? Peers in sense, compare with the like objects. You can't compare a developing country with a developed country. Compare with a developing to a developing itself, right? You can't say Indian economy it's 3.5, but US is so big, because that's a developed country, right?